Have you ever seen those kind of analysis where there are triangles in the screen and then you wonder what is happening here? So today, guys, I want to teach you about Fibonacci expansion. This is not about triangles, but eventually it creates a triangle. So guys, you have to watch this video up to an end because this, what you see in the screen is just a preview of my of what we are going to be learning about today. So make sure that you like, you subscribe, you watch this video up to an end. Let us look at this preview, guys, before removing everything. This is Fibonacci, guys. This is Fibonacci. It gives you, as I've promised, it gives you the supply and demand. So you have to know where the positive side of the market and the negative side of the market. So in this case, the positive side of the market, guys, it's the side which is it is all these resistance points, and then the negative side is this support points, the support points. So what we have to know, guys, today is that as I've told you in another video, the market normally this guys, many traders, they don't want to trade in the middle unless the market is coming from above, right? So when the market starts, they just relax and then wait for it to break. As you can see, this was a breakout at the 38.6, and then this 38.6, you must add it, guys, because it is not there on your chart, right? You must edit. I will show you how to edit. So they don't trade in the middle of this Fibonacci expansion. They will start trading when they see the breakout, and then they will wait for retest, as you saw, as you see, and then after that they take it to 100, because eventually the 61.8 is the strongest point. So if the market breaks it, it means that the market is going far, right? And then they will buy here and then take profit here, and then when it comes back again, they will retest that point, right? That previous resistance, that previous support, and now it's a resistance. Then they enter here and then they ride it to the 38.2 at the point 6 again, and then they retested the 31, and then it was a bullish momentum, right? So this is what the Fibonacci uh, gives. This is what I'm going to teach you today, guys. You can see the triangle here. So I will teach you how to place this Fibonacci so that you can have these lines, all of them, right? So that you can trade along it, right? Remember, the 68.1 is the strongest point, and the 36, and then the 38.6 is a line where you should look for a breakout, and then the 100 is also strong. So let us remove everything. Okay, guys, welcome back. Let us look at how to place our Fibonacci for supply and demand, or support resistance. Firstly, guys, you are going to identify your swing high and swing low. This is your high. This is your low. And then after that, you are going to do what? You are going to look for the low after the high. So the low after the high, it is this point, right? So this is where we are going to place our Fibonacci. And then Fibonacci extension. The point which you are controlling, guys, the part which you must control mostly, it is this part which has 3 points. 1, 2, 3. This is the one which you must first control. So I'm going to control it. I'm going to take this low point to here, and then this high point to here. And then after that, I'm going to take this one, which does not have anything in between here, right? Okay, now I've generated what? My resistances. Now I've generated my resistances, as you can see. Now I want the support, my support. So I'm going to do the same thing. But this time, my V shape, it has to look downwards. Why? Because I'm looking for downtrend, if downtrend happens. So you must take it as a V. It's a V, right? It's a V, guys. So this Fibonacci is going to be, it's going to look down. It's going to look in a V shape, right? So I'm going to take this point here. Remember the point which I'm controlling, and then I'll take this one here, and then this is the point which I control mostly, which is my Fibonacci, this one, and then I take it to here also. And then now you see the triangle which was there. So this triangle, guys, is going to give me the supply, I mean the supply point, and then the demand points, or the support and resistance, right? The resistance and the support. And then now I can mark my points, and then we have a line of breakout here. If the market breaks this point, also below I have my line of breakout here. I have the 68, which is strong, guys. The 68, I mean the 61.8, and it is strong, and also the 100. This one, as you can see how the market is reacting. And then I will place it on the 68. I mean the 61.8. As you can see, guys, now I have my my supply point or resistance point, and then my demand point, which is the support point, right? So every time when the market approaches these points, um, it is either it reacts or it breaks. So I will incorporate it with moving averages, MACD, stochastic, and all those oscillators, guys. Because remember, guys, if ever you have an indicator which gives you supply and demand, and a respected supply and demand, when you compare, when you add tools like moving average, you start to understand what exactly is going to happen when the market approaches those points. Because after placing moving averages, they show you the momentum, right? That okay, the trend is going up. So if the moving average, they tell you that the trend is going up, there is no crossover, it's a buy signal or a bull signal, you are not going to sell here. You are going to what? To ride the trend. So supply and demand, or support resistance, they act as what? As barriers, possible barriers, where you have to watch using your momentum indicators. Because remember, guys, the speed, it's very important. Then there is a speed, there is a friction. So you must take these resistances as your frictional force, which is going to lower the speed of the market. So when the market approaches what? When the market approaches a resistance, we want to look at the speed at which the market approaches our resistance. In this case, the market approaches this point in a very high speed, meaning that at this point it is going to be broken, looking at the speed at which the market it's approaching this level. And then it did broke. So you're going to confirm the speed using moving average, MACD, stochastic, and all the RSI, all those tools which are there to calculate speed, momentum, right? So after that, after the breakout, what? The speed lowers at the 61.8, and then already there was a breakout, and then they started loading orders at the 38.6, and then again momentum start again reboots, and then they um, hit the 100. After hitting the 100, now the market is satisfied with the highest point, because they were looking for what? If you see the market moving like this, it means that they were looking for highest point, highest price. So they started selling here, and then breaking, and then retesting the 38, because it was the chosen level, the 38, and then bam, and then they hit this level, and then they hit the 68, and then boom. So this is how, guys, you place your Fibonacci. Make sure that, guys, here you like the video, you subscribe, and then you watch my other videos on Fibonacci. Try to add this thing. Maybe you can create a better strategy. Watch my other videos, guys, as I will be teaching you everything, so that when you combine everything, you are going to start having positive stuff, right? Start looking the market in a different way, right? Make sure, guys, that you don't forget to subscribe, to like, and then until next time.